Well, with that, let's move on and welcome in our first corporate guest on the show today. The company in focus is Paras Defense and Space Technologies. Now, it came out with a slightly weak third quarter. There was subdued performance on the top line. There was margin contraction. And there was some pressure at the profit level as well. And in other news, the cabinet has, of course, allowed 100% FDI in the space sector. That, of course, impacts companies like Paras, which operate in this segment. Amit Mahajan, Director Technical and R&D at Paras Defense and Space, is with us. First on the regulatory front, Amit, I just wanted to ask you whether this 100% FDI in the space, whether that kind of impacts you in any way. Are you looking to raise more capital? Are you looking at any equity collaborations with any potential foreign partners?
Good morning. Thank you for having me on the show. On the fund side, we are not looking to raise any funds. On the capital side, we are not looking to have any equity collaborations. What this FDI allows is there are a lot of space startups which are floating around in the country. Paras is working with a lot of space startups. Now, what happens is these space programs get another momentum. When you have an FDI coming in, the lot of revenue that is required to put up a mission and then put it up in space, all of that gets solidified. The chances of it becoming successful only increases multifolds. Now, when that happens, all these missions will have a lot of contribution by companies like Paras. Some areas where we are doing a lot in the mission, some areas where we are doing only the optical payloads in the mission, some areas where we're doing the radar or the synthetic aperture radar kind of things for the mission. All of that, when it goes up in space, all those funds will be mobilized and the success rate increases.
Okay, Amit, so got that. I mean, since you're not looking at it for your company, let's move on and talk numbers. The third quarter performance was a little subdued, as we pointed out. I mean, there was margin contraction, top line, there was hardly any growth. But you've guided for, I think, up to 40% revenue growth for the current year. Will you be able to deliver that?
Yes, the third quarter was subdued for a couple of reasons, which are a part of the business. The defense electronics delivered more because we're a project-oriented company. At the end of the year, which is the real sign of how we should be looking at the company, we will be doing in excess of 30%.
Okay, you'll be doing ahead of 30% by the end of the year. And give us a sense on margins as well, because they contracted and came down to, I think, just about 21%. Yeah, just about 22% at the end of the third quarter. So why the compression, and how do you plan to end the year at the EBITDA margin line?
So there is nothing to worry about at the company level. First, I would like to mention that. The subsidiaries, if you look at Paras Aerospace, Paras Anti-Drone, and the other subsidiaries that Paras Defense has employed a lot of manpower and at the same time are doing a lot of R&D expense. Now, these subsidiaries are not yet doing any revenues. All of these R&D expense currently get parked as an expense for me, and because of which you see certain losses. Now, these losses, as they will be ironed out at the end of this year for sure, but these will convert into revenues next year and then will jump the profitability. For now, at the end of this financial year, we should be able to sustain the margins that we had last year.
Okay, we'll leave it there. Appreciate you joining in this morning with that. And it's a good conversation. Thank you very much for being here on CNBC TV 18.